Over the past few decades, the headlines of various news agencies have highlighted the explosive growth of China's economy in the past half-century. However, despite this, the global economic landscape is changing, and strong indicators suggest that China's dominance may not be sustainable forever. In this video, backed by reasons and documentary statistics, we explore potential factors that could lead to China's decline and examine emerging powers that might alter the outlook of the global economy. China's remarkable economic growth, fueled by export-oriented production, infrastructure development, and elevating the middle class, has transformed it into the world's second-largest economy. Its expanding influence across various sectors and its position as a major player in international trade have garnered global attention. Despite its significant achievements, China faces major challenges that could undermine its economic supremacy. The most significant challenge we want to discuss, and inevitably affecting China's economic aspirations, is the emergence of some potential economic powers and, of course, the existence of former economic powers. Persistent trade disputes, geopolitical tensions, and shifts in alliances may impact China's access to global markets and hinder its economic growth. Persistent trade tensions between China and the United States, leading to tariff impositions and trade restrictions, have affected various sectors. In response to and retaliation in the trade wars with the United States, China seeks to diversify its trade partners by enhancing economic cooperation with countries in Asia, Europe, and Africa through initiatives like the Belt and Road Project. China's overall ambition for the Belt and Road Initiative is remarkable. To date, 147 countries, representing 2/3 of the world's population and 40% of global GDP, have signed agreements or expressed interest in pursuing this initiative. Furthermore, China actively engages in multilateral organizations such as the World Trade Organization and pursues regional trade agreements to strengthen its economic relationships and, of course, reduce the potential impact of geopolitical challenges. This map clearly illustrates some of the regional and international disputes involving China. China's recent support for Russia is the latest reason for the rift within the European Union. The EU and China, the world's second and third largest economies, have been at odds on human rights issues since March 2021. Former Soviet republics, such as the Czech Republic, view Xi Jinping's support for Putin as a threat to Europe's security. For the first time since the Tiananmen Square protests in 1989, the European Union imposed human rights sanctions against China last year. It's not just Europeans who are concerned. China's neighbors are also worried about the country's regional economic and military dominance. Japan seeks closer regional cooperation with the United States, and South Korea, under its new president, aims to downplay historical grievances against Tokyo to form a stronger front against Beijing. India, still not forgetting border clashes with China, actively participates in security talks with Australia, Japan, and the United States. While China faces these 5 challenges we've discussed so far, other economies are in a position to challenge its dominance. The first and most powerful country ahead of China is the United States of America. The US remains a powerful economic force with a highly innovative and dynamic economy, technological leadership, and a robust financial system. According to the International Monetary Fund, the United States, with a population of over 335 million, has the world's largest GDP in 2023, reaching around $26.9 trillion. Additionally, the foreign direct investment in the United States position increased $216.8 billion to $5.2 trillion at the end of 2022. The increase mainly reflected a $142.2 billion increase in the position from Europe, with the largest increases from the United Kingdom and Germany. The second country that can potentially disrupt China's growth trajectory is India. With its young and growing population, India has the potential to become a major economic force in the coming decades. According to UN estimates, India surpassed China by the end of April 2023. Based on estimates published by the United Nations in the 2023 revision of World Population Prospects, India's current population has reached 1.428 billion in 2023, showing an increase of approximately 0.8% compared to 2022. India, despite being the 7th largest country in terms of land area, is accommodating nearly 18% of the world's population. According to the World Bank, India's gross domestic product, GDP, has been consistently growing, reaching around $3.7 trillion in 2023, making it the 5th largest economy in the world. Additionally, India is renowned for its thriving technology sector, transforming itself into a global hub for information technology services, software development, startups, attracting investments, and fostering innovation. The third direct threat to China's continued economic growth comes from the European Union.
Our ministers to finalize work. We understand how it is important to deliver.
Despite existing challenges, the European Union continues to possess significant economic influence driven by advanced productions, strong financial centers, and a commitment to sustainable development. In 2023, the combined gross domestic product (GDP) of the 27 EU member states reached around $18.3 trillion, making the European Union the second largest economy in the world after the United States. It is projected that this figure will reach $19.28 trillion in 2024. After the first population decline due to the global impact of the COVID-19 pandemic in 2020 and 2021, the EU's population increased again in 2022, reaching 448.4 million in January 2023. Considering the EU as a single country, it would be the third most populous country globally after India and China and ahead of the United States. The European Union is home to numerous multinational companies and is a leading exporter of goods and services. Additionally, the EU's emphasis on renewable energy and green technologies is reflected in substantial investments in clean energy projects, positioning it as a global leader in transitioning to a sustainable economy. Southeast Asian countries, collectively known as ASEAN, represent the fourth factor that could continue to grow economically in line with China.
How will we realize the potential of the fourth industrial revolution?
ASEAN comprises 10 countries, including Indonesia, Thailand, Singapore, Vietnam, Malaysia, the Philippines, Myanmar, Cambodia, Brunei, and Laos, with a combined population exceeding 672 million. If considered as a single country, this group would be the third most populous nation globally after India and China, and ahead of the United States, while most of the population of ASEAN countries, approximately 274 million, belongs to Indonesia. Countries like Vietnam, Indonesia, and Malaysia are experiencing rapid economic growth, attracting foreign investment, and becoming key players in the global supply chain. According to the World Bank, the combined GDP of Southeast Asian countries reached approximately $3.862 trillion in 2023, positioning it as the fifth largest economy in the world, ahead of India. Indonesia's GDP growth rate as the biggest member of this group in 2023 is estimated at around 5%, with a similar pace of economic growth forecast for 2024. These countries benefit from relocating manufacturing activities from China and attracting foreign investors looking for alternatives to China. And finally, the fifth potential threat to China's economic trajectory is Africa. Economic reforms, infrastructure development, and the rise of the middle class contribute to Africa emerging as an economic force. According to the African Development Bank, Africa's GDP grew by 3.8% in 2022, reaching $2.2 trillion. As of 2023, the GDP of Africa was estimated at roughly $2.9 trillion. This was the highest value since 2010, when the continent's GDP amounted to approximately $2.1 trillion. Additionally, UN's World Investment Report published on 5th July shows that foreign direct investment (FDI) flows to Africa declined to $45 billion in 2022 from the record $80 billion set in 2021. They accounted for 3.5% of global FDI. Africa is a resource-rich continent. Recent growth has been due to growth in sales, commodities, services, and manufacturing. West Africa, East Africa, Central Africa, and Southern Africa in particular are expected to reach a combined GDP of $29 trillion by 2050. The future economic outlook for various countries worldwide is uncertain, given the unexpected recession caused by the unprecedented global spread of the COVID-19 pandemic. Nevertheless, it is clear that China's path to sustainable economic dominance is not without challenges. Increased competition, domestic pressures, and global changes create an environment where China's position can be challenged. Collaboration, innovation, and widespread growth are crucial for global prosperity. Whether China remains at the forefront or other economies surpass it, these economic transformations shape the lives of billions of people worldwide.